You may recall just last fall, headlines were everywhere talking about a housing market correction in 2023. Most of the expert predictions were that home prices would fall anywhere from 15 to 20% due to the fact that higher mortgage rates, would evaporate buyer demand. But instead, the housing market has shown incredible resilience, even in the face of those higher mortgage rates. And home prices are actually rising again in many parts of the country. So, what exactly does that mean going forward? And what can you expect for the rest of 2023? And how are we likely to be impacted here in Frisco, Texas? That is exactly what I'm going to dive into in today's video. Hi, this is Andrew with the Andrew Smith team with eXp Realty here in Frisco, Texas. And there's a large number of buyers who put their home searches on hold in 2022. And I can't really blame them. At first, they were tired of the bidding wars, the multiple offers, and the rapidly rising prices, and didn't want to be a part of it anymore. They got completely burned out. And then we had soaring mortgage rates that were just rising faster than they had ever risen before. And so what we're finding now, as many of those buyers are starting to come out of the woodwork, so to speak, and come back, they're finding that the current market is not matching their expectations. Now, as I mentioned just a moment ago, the headlines from last fall left many buyers expecting to find a market with significantly lower prices and much cooler conditions than what they experienced a year ago. And yes, conditions are not as hot, but they're finding that things aren't quite what they thought they were going to be. Now, even lately, Selma Hepp she's the chief economist at CoreLogic. She pointed out that while housing markets across the country continue to send mixed signals, prices in many metros appear to have turned the corner, with the US recording a second consecutive month of real estate pricing gains. The 1.1% increase experienced in April, as she reports, is actually nearly twice the average we saw between 2015 and 2020. So why aren't the home prices falling the way people thought they would? Or why is it that buyers coming back into the market today are finding conditions and prices much different than what they thought? Well, it really comes down to inventory. Again, Selma also had to say that the monthly rebound in home prices underscores the lack of inventory in this housing cycle. In addition, while the lack of affordability generally weighs on home price growth, mobility resulting from remote working conditions appears to be a current driver of home prices in some parts of the country. What Selma's basically saying here is the work from home phenomena that we've had has kind of shifted, and it's migrated demand to other areas, which has had a significant impact on home prices when it was generally thought that they would fall completely. As a matter of fact, based on this, many of the experts are now starting to revise their forecasts on what they think home prices will do in 2023 overall. Here's how Fannie Mae recently revised their forecast from March to April. And as you can see, just in March, they were expecting home values nationally on average to fall 4.2% in 2023. By April, they're only forecasting a 1.2% decline. Now, that is a significant turnaround in the space of just 1 month. But ultimately, no matter what the national numbers are being reported, all real estate is local. And so what you see and hear on the news might not be an accurate reflection as what is actually going on in the local market. As a matter of fact, here we can even find that what the conditions that are being experienced in Dallas or Fort Worth are not the same as we're seeing here in Prosper and Frisco and Salina and McKinney. It's very, very different. As a matter of fact, Danielle Hale, she's the chief economist with Realtor.com. Here's what she had to say. Real estate has always been local, but as the buyers and sellers adjust to higher mortgage rates and lower affordability, regional trends have diverged sharply. This makes it more important than ever for buyers and sellers to tap into timely local real estate data and conditions when evaluating any housing related decisions. So, that, as Danielle is saying, is what we're seeing right now. There are massive differences around the country in what's being experienced. As a matter of fact, here in Frisco, we were ahead of the curve for what the nation saw with regards to home prices. Our home prices peaked in April of 2022. Nationally, they didn't peak until June, and even later in some other areas of the country. So I'm going to share my screen with you now for just a second and show you exactly what it is that we're seeing here in Frisco. Okay, so this screen that we're looking at right here shows you the change in median sales price, what we saw in Frisco. And this is going back 3 years. I'm actually going to change that to 1 year for this purpose. There we go. So as we can see, at the beginning of 2022, this is when prices were on an absolute tear. Multiple offers and bidding wars were a part of what we were experiencing on a daily basis until April. This marks April 2022. And as you can see, we saw a steady decline all the way until August. So the price decline that we experienced actually happened before it was even in the headlines. And this is the price decline that we saw. And then we kind of treaded water for a couple of months. And then the builders brought all those incentives in to try and move property. And we saw prices increase in the back 2 months of the year. So November and December held steady. And then we saw this big drop in February. And if you caught any of my videos from back in February, you might recall that I had said that I thought that was an anomaly. It was not the signs of a new trend. What had happened here is there were so many new home sales in this area that closed that the builders were kind of low on inventory. So there was not as many new homes, which are usually priced higher, in this mix in February, which caused the overall median sales price to come down. As expected, it did rebound in March to 700,000 and then dropped again in April to 665. This change right here is completely normal. It's based upon the mix, the blend, if you like, of properties that sold in any given month. And I fully expect this will bounce back up a little bit as we go through May. And that's kind of that up and down jagged line is very, very normal and something that you can expect to see. Now, one thing I do want to point out about this is that when you're looking at the median sales price, it's important to understand that median sales prices are like looking in a rear view mirror. They're showing us what happened in the past, meaning these homes that closed in April, they actually went under contract where they were listed for sale probably late December or January. They didn't go under contract until sometime February, maybe even early March, and then they closed in April. So this sales price is a reflection of what we saw going on in the market at the beginning of the year when mortgage rates were higher. They hadn't started their downward trend that we've seen over the past month or so. So that's an important factor to point out. The other thing when you look at it is where a price is going to go from here. Well, for that, one of the things I like to look at is where are we with regards to the median list price? So this right here is showing us where the list price is over the past several months. And as you can see right in here, list prices are trending upward, especially the past 7 days. So by the end of April, the 7-day average new listing price was $825,000 here in Frisco. So when you look at the median list price, you're actually looking forward. You're looking at where things are expected to go in the months ahead. Now, as of right now, what we're also seeing is a downward trend in mortgage rates. It is widely expected from many of the experts I've spoken to that we're going to see that accelerate even more later this month because the 12-month rolling average of inflation is going to show positive numbers. And actually, inflation is the enemy of long-term mortgage rates. So as inflation numbers come down, you're going to see mortgage rates come down too. So, what does that mean going forward? Well, as mortgage rates come down, many buyers that have been sitting on the sideline and start to notice that prices aren't coming down, they're going to come back into the market again and they're going to put increasing pressure on what is already an inventory starved market. We do not have that many homes for sale overall. That's going to put more and more pressure on the properties that are. We're already seeing multiple offers again. We're starting to see homes sell above list price in many cases again. Do I think we're going to see a runaway like we did last year? No, not at all. But the upward trend on pricing, or I should say prices going forward, look as though they will continue that upward trend. So looking back over the past year, if you consider last April was our peak and prices started coming down fairly rapidly, and now we're seeing prices tick up. Very soon it will be reported that the month over, or sorry, not the month over month, but the year over year appreciation numbers are in fact going up. So hopefully this helps kind of give you an idea on what's going on here in Frisco and what I see going forward with regards to pricing. If you have any questions whatsoever, I invite you to reach out. At the same point in time, I do have some useful tools for you to be able to track this yourself. In the description below, I've got a link to a weekly market report that allows you to see exactly what's going on in real time. I've also got a link to my homeowners report. So if you own a home currently and want to track how things are moving in your neighborhood and with your home, there's a link to that down below as well. So as always, any additional questions, please feel free to reach out. You can give me a call at 469-296-5230 or send an email to Andrew@theandrewsmith.com.